warm welcome to everybody. I am Shreja Agrawal, and with me is a very special guest today. With me is Saurabh Mukherjea, who's a veteran markets fund manager. He's actually written 3 books on markets and investing. He used to work with Amidst, and now he set up his own shop called Marcellus Investment Managers. Saurabh, thank you for talking to
My
us.
pleasure.
My first question really to you in the time of elections is that, whenever I've spoken to, market fund managers and economists, and the first question, or perhaps the answer they've given to me on this correlation between election and markets really
Sure.
is that absolutely there's no correlation. But I would want to understand from you that, the world's largest democracy is going into elections. How can that be such a non-event for markets?
The human interest in elections is understandable, right? This is powerful men and women jockeying for great position and influence, and obviously all of us are deeply interested in that whole journey. The challenge in our country has been for a long time now that politics is not about economic policy or anything which drives the economy or financial markets. If you see on both sides of the political divide, we broadly have a consensus on how the country has to be run. So both sides, for instance, in the current election, both sides are keen on giving money to the poor. Nobody really has any clear answers as to how to create jobs. Both sides are committed to a liberalized free market economy, right? And it's in that context that because there is no ideological divide, in India it's historically not mattered very much who's won and who's lost from a market's perspective. If you look at the last 30 years, Trija, you won't find a single instance of government X not following the economic policies of X minus 1. There's been a great deal of continuity in economic policy. In fact, economies like America should envy the amount of continuity we have in economic policy. Obamacare got repealed by Trump. No such thing will happen in India. GST was mooted by the UPA, executed by the NDA, and that continuity is great for the country. But the human interest remains. We all want to know who will win on 23rd May. And we should want to know. It should be part of our identity as to who.
But so simplistically, are you saying that doesn't really matter who comes to power for the markets?
For the day reaction, there might be a 23rd May reaction depending on who wins. But in the longer run, it's never mattered in India. If you look at India, our GDP growth in every decade has been higher than the decade before.
Yeah.
70s were better than the 60s, 80s were better than the 70s, 90s better than the 80s, so on and so forth.
So we have been on a growth trajectory, which is why we call it a growing economy.
Absolutely. And the growth trajectory, I don't think, is underpinned by our politics. There are other impulses which drive our economy forward.
But sort of tell me one thing that, you mentioned this very interesting point that there is a huge sense of continuity.
Yeah.
And because that continues, it does not necessarily worry the institutional investors so much.
Absolutely, yeah. I mean, if they were worried, we would see jitteriness in markets going into elections. Instead, we have the Indian market trading
At an all-time high right now.
Absolutely. Not just all-time high, even from a PE perspective. The only times India has been more expensive in the last 25 years was the dot-com boom and the post-Lehman boom. I think you could argue we're even more expensive than the pre-Lehman boom, right? So markets are expensive, foreign investors are confident, domestic investors are feeling bullish, and that clearly is a signal of confidence in the institutions which underpin our free market economy.
So talking about this entire thing that you spoke about, India as an economy being hot or cold right now, 18 times price to earnings is currently that we have right now, which is extremely high, which means that investors are assuming that we will grow a lot. We're talking about 8% plus growth here. Are we on that trajectory? I mean, what do you think?
Right. So I think not just in India, Shrija, I think across the world, because of 10 years of quantitative easing, because of 10 years of quantitative easing or 8 years of quantitative easing followed by 2 years of super loose monetary policy, across the world, whether it's in America, whether it's in India, whether it's in private equity or in the listed market,
it's super abundant capital.
Yeah, you clearly have expensive PE multiples, and as you're alluding to, I don't think there's any rational justification for the PE multiples for the whole market. That being said, I've never quite understood why anybody buys the whole Indian market, why people buy the Nifty. Because if you look at the Nifty, 30 out of 50 companies in the Nifty have awful fundamentals, right? These are poor balance sheets, badly managed franchises. So it's like going to the sabji mandi and I was saying, I'll buy every single sabji in the sabji mandi, even though I know half of them are rotten. If you separate the quality out of the chaff, the wheat from the chaff, our best companies in India, companies with ROCs, return on capital consistently above 15%, growth consistently above 10-11%. The best companies in India have better fundamentals than almost in any other emerging market, and they are worth the price they're trading at. Our challenge is the vast majority of the Indian market actually is fairly poorly run companies, and there the price multiples are clearly out of whack with reality. If you see the last 10 years, Nifty EPS growth has been barely 8%. At a time when GDP growth in India, nominal GDP growth is 13%, our Nifty EPS growth in 9 out of 10 years has lagged GDP growth by a massive margin. In fact, S&P 500 earnings growth has been 15 to India's 8, even though our GDP growth is twice that of America. So our economy is growing twice as fast, their earnings are growing twice as fast. What's happening is, as we become a richer country, as our affluence increases, the vast majority of what we are buying is no longer made in India. Right? Barring our FMCG, barring our pharma and our financial services, very little of what we are spending money on is actually listed in the Indian market. And as we become more prosperous, this problem will only exacerbate. So our prosperity is feeding earnings in the S&P 500 and feeding prosperity earnings in China. It's not feeding into the Indian market.
That's a very interesting view. Now, talking about this entire US-China tension that we have, there's one view that it can actually be a benefit to India. Of course, there's one view that India can have a second chance to replicate China to take on the manufacturing quotient. Do you sort of subscribe to this view, and do you think that's kind of feeding into the 8% growth trajectory that we can talk about?
I think far more likely, Shreeda, far more likely outcome over the next 10 years is we've clearly figured out what we are good at in our country. We're a services economy. Whether it was the KPO industry, which might be fading away, or the IT services industry, which has found another lease of life, we've found a niche where global capital, private equity money primarily, some of it FDI, say firms like Amazon, they're coming to India, they're finding a large market that's creating jobs for our people, whether it's in delivering pizzas to people's homes or working in these large companies, Indian subsidiaries. This play, I think, has a long way to go. Global capital coming to India, allying itself with Indian labor, Indian talent, and capturing the Indian market. From the perspective of GDP growth, I don't think we have that big a challenge over the next decade. We have got enough headroom to grow at 7-8% fairly consistently. Where the challenge arises is for the stock market, right? Because we have a great deal of poor capital allocation, low quality governance, low accounting standards in the stock market, and that is dragging down stock market returns for the vast majority of investors. So the economy I don't worry about so much, but I do worry about the majority of the large listed companies in our country who are simply not being able to deliver the sorts of fundamentals they need to justify their PE multiples.
So sort of tell me one thing, that you spoke about this entire private equity money coming into the country and how they're sort of partnering with local talent and labor here. So private equity currently is seeing this huge influx of capital. In fact, we
globally,
have globally, in fact, also in India, there's a huge avalanche of capital coming here. And whenever you speak to limited partners or basically institutional investors with private equity funds, they are basically driven by GDP numbers. They'll go by where GDP is.
Absolutely.
Take us through what is the sense you're getting for investors into stock markets. You said because that is what is worrisome for you.
Exactly. So this is, if you ask me, this is one of the central challenges for the stock market. The stock market in our country is no longer a venue for raising growth capital. Growth capital in India comes primarily from private equity in our country now. And if you look at IPOs in our country, barely any primary capital is raised. It's primarily exits for PE and for the promoters, right? So stock market in India has become a complete sideshow with regards to raising capital and fueling development. Development and growth is fueled by PE. So if this continues for another 4-5 years, I fear that the Indian stock market will become irrelevant from a capital raising perspective, right? So it's great for PE firms, homegrown or overseas. They've got a real opportunity. But for people who invest, who earn a living by investing in the Indian stock market, such as me, I think we need to think deeply about what can be done to make the Indian stock market more dynamic, more receptive to helping companies raise growth capital. Otherwise, this current trend will perpetuate. Global PE shops and Indian PE shops will gobble up the entire growth opportunity in our country.
So are you saying that Indian stock markets are more for operators, market operators and punters, and not necessarily for serious players?
I think the Indian stock market is no longer the exciting venue that it was 10-15 years ago for raising primary capital, right? And that's evident in the data. Just look at the number of IPOs that we've done in the last 3 years and how little of the money raised was primary capital. And that should worry the people who are responsible for overseeing the stock market. And at the same time, as you report in your own newspaper, the PE fund flow numbers are hitting record highs
Yeah.
almost every year. And the paradox is unbelievable. PE record sums pouring in, stock market capital raises, hey, where is it? I can't see that much primary capital
So
in the
that's
stock
pretty
market.
much evident in the data you're saying. Saurabh, but I would again sort of want to get back to this entire question of elections and markets. And don't you think there's been any research to prove what kind of power, what kind of government is good for markets?
Right. So there is a very good book. There's a book called Democracy for Realists, outstanding book written by 2 American professors. They published this book 6 months before Trump got elected. It's probably the most prescient book written on this whole drama of elections, democracy, and economic growth. And what they say in this really well-researched book, Democracy for Realists, that it doesn't make any difference. Whether it's in America, whether it's in the UK, whether it's in India, the identity of democratically elected governments, the impact of that on economic growth is negligible the world over, not just in one country or the other, not just at the national level, even at the local level. They use American state election data, British election data, European election data. They have some Indian election data as well to show that it really doesn't make any difference. That correlates nicely with our practical experience in our country. As I was saying, GDP growth in India has done this over the last 60 years. I don't think we can sit here and say our politicians were responsible for the rising curve of GDP growth over 60 years.
So what remains the future of democracy in this context then?
I think democracy will stay well and kicking, alive and kicking. It's a natural way for people to voice their opinions. There's a lot to be said for that. But one shouldn't mistake that for saying that those opinions have a tangible impact on economic growth. There's much more in life. There's much more to life than economic growth. There's issues around quality of life, personal freedoms, religious expression, and democracy is a viable way, is a feasible way, indeed probably the best way to articulate all of those opinions. But one shouldn't expect democracy to be the main driver of economic growth. The data doesn't suggest it is. As I said, if you read Democracy for Realists, the data is pretty clear. There is no correlation between political parties and GDP growth the world over.
Okay, with that as a thought, I think it's a wrap from our end. For the time I see you next, it's goodbye and good luck. Thank you.